Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. We've got some Twitter information. We'll go over it, and I'll share what we're seeing on Twitter. A bunch of different information across a whole bunch of different things. So let's dive in. We've got in the upper left here this huge truck, and it says, "I'm at the launch of a prototype of the world's largest hydrogen-powered mine haul truck at Amplats." That's the platinum mine. It weighs 220 tons and emits zero emissions, a feat of engineering. And what I'm really looking at is hydrogen-powered mining truck. And that's pretty insane because hydrogen-powered usually means that it runs off of platinum. And platinum demand could be coming in much greater quantities than what we think if they start building more and more of these big hydrogen trucks. And I think that's where hydrogen is going to be used is airplanes, large trucks, and mining things, because we see diesel going up, and I don't know. Hydrogen is a net energy sink. It's not an energy positive. And remember, it's just a battery. It's like a battery. It's a storage of energy. It's not a energy source. But if they decide to go this route, that's great because we're going to use more platinum. Looking at this, it says 2 inflation-related charts. The household energy burden in the U.S. is still moderate versus historical levels. So the energy burden back in the 1980s had exceeded 6% of household energy burden. That's the percent share of total personal consumption expenditures. And we were way down at 2% in 2020 at the lows. So we could go up quite a bit in terms of household energy burden and still be within historical norms. We've got Bitcoin down here. It's not just stocks. Bitcoin is also down, plunging more than 7%. That's Bitcoin taking a hit. We've got Octavio, it's Tavi. Apparently, the venture capital index has crashed only after 75 basis points of rate hikes so far by the Fed. That's the venture capital index. We've got total consumer credit at record highs. That's kind of weird. I don't know if that's from inflation or what's going on, but or if that's causing the inflation, because consumer credit is a portion that expands the money supply. We've got keep your nuke plant open. California warns it may be at risk of blackouts for the next 3 summers due to power supply shortages and extreme weather. Why are they shutting down nuclear power plants if they expect to have blackouts? They need to keep this stuff open. This is U.S. natural gas. This week, it was up 10%, even though we had a large down pullback this past Friday. But it was up 10%. We've got, this is becoming a runaway train now. This is the United States 10-year bond yield continues to run higher, 3.144. He's saying it's a runaway train. We've got crude oil. I just noticed this. This is, if you were at the Finding Value website training, we were talking a little bit about patterns that I've seen, pattern recognition, and Elliott wave and whatnot. This is the crude oil 2x bull ETF. We have a textbook Elliott wave structure since December 2021, 9.23 low. Usually we look for a triangle in wave 4, which is what we have here. Stop is placed at 2052. If this plays out, it would be a nightmare scenario for the Fed. And this is moving way higher. They're talking about HOU, which is that 2x oil bull, and they're projecting a move far, far higher from a land far, far away. And I agree. I think we're going to go much higher this summer. We're going to get squeezed. And I am basically positioned for this move. And if you guys want to know what to do about this, you can sign up to my Finding Value website Platinum membership, and I go over all of the companies that I think that are really good for a move in crude if this were to materialize, which I think it is going to. We've got California power supply and demand. You can see solar throughout the day here for Saturday, April 30th, Sunday, and then you can see natural gas basically covering a lot of these gaps. You've got imports. You've got wind, hydro, nuclear as the base load down there, geothermal, and then very little exports. Just to show you that, we've got German 10-year bund yields rocketing higher. So they're also taking off, just like the 10-year yield is in America. Coming on up, we've got Some other quotes here. Buffett, it's not because we're smart, it's because we're sane, discussing his success. Munger, never had anything like what we have now. Unprecedented gambling and people lathering them up to gamble in the market. So that's what they're talking about. And that's what you usually see at market tops. Unprecedented gambling. Think of it as cryptos. Cryptocurrencies and stuff like that is probably what they're referring to. Buffett's Berkshire Hathaway. So how are they positioning? BRK now appears to own 21.6% or 220 million shares of Oxy. That's a big bet on oil and gas company. So it's a big bet on oil gas upside from here is what they're thinking. And that's how basically I'm positioned as well. I don't really care who positions like me, but looks like they're coming and hopping on the train with us. Here's housing prices in the U.S. They're at moderately high levels versus disposable income. Canadian housing prices have unhinged from net disposable income. This is Canada's housing prices because they're demographic. They have housing shortages up there. And it become unhinged from the incomes. United States hasn't become unhinged. We are still within historical norms. And this is what it looks like right here. This is America in the blue. This is Canada on the right here. So US, Canada, and Australia, New Zealand, they all look like Canada. We haven't really taken that huge surge higher. I think we possibly could. We'll find out. We'll find out what happens in the United States here shortly. Coming back up, we've got, I keep tweeting it, but when inflation is rising faster than wages, you expect very low unemployment. Labor is becoming cheaper relative to the goods and services it produces. It's on sale. So yes, we can have a recession while people are employed. They can't buy as much. That's when inflation is outpacing. But that's happened since the 1970s. Inflation has outpaced late 1970s, or the early 1970s. Inflation has outpaced wage growth. Another reason to keep zero carbon Diablo Canyon. Diablo Canyon is a nuclear power plant where I went to school. I went to school in San Luis Obispo. It's just south of there. Nuclear power plant online. California energy officials on Friday issued a sober forecast for the state's electrical grid, saying it lacks sufficient capacity to keep the lights on this summer and beyond. So why are they shutting it down? I don't get that. Median U.S. House priced or home priced in gold. I divided the bottom channel into two to show the quarter line hit. The halfway flag measured move goes up to about 43. At $8,000 gold, that's a $344,000 median home and about 20% decline from here. That's what he says. In terms of that, UK plans new energy law to enable renewable nuclear build-out. The UK will introduce new laws for energy to enable a fast build-out of renewables and nuclear power stations, as set out in the government's energy security strategy last month. An energy bill will be included in the Queen's speech on May 10th, according to a person familiar with the matter who asked not to be named because of the information is public. So we've got here, growth versus value is still very elevated. This is far from the end of the rotation. This is from HFI Research. They think that the value stocks are going to outperform the growth stocks and come all the way back down to a very low level, maybe like 07, 08. So we have a long way to go for this money rotation to happen. This was the circle of that rotation. It's very similar to the commodity to stock ratio. But yeah, this is going to head lower, I think, for over probably the next few years, is my estimation. We've got up here on the right, this is oil in the red, natural gas in the green, and uranium is lagging behind. And I think we're going to see a big move in all of these energy prices, all of them. And uranium could have a massive move to the upside. And remember, I always say could. I don't know for sure. No one knows for sure if we're going to get that move. But I'm positioned in these three for energy to continue higher because of the market conditions, because of inflation in the system. And uranium's looking really good. I really do like uranium down here. Breaking, March consumer credit just saw a new record at $52.4 billion. The old record was $37.7 billion. The average pre-COVID was around $15 billion per month. Is this a sign of consumers feeling good and spending, or is it a reflection of high inflation? Good question. I don't really necessarily know. Could be a combination of both things. World Government Bond GDP Weighted Return Index. So the annual returns 2022, look at that, super low. It's very different than everything else that we've seen. Pretty crazy. We've got the NFT market is collapsing. Turns out digital rocks and digital monkeys was not a good store of value. I just think that was funny. Had to post it up here. Sorry. It says, don't know, guys. Looks pretty definitive. Crude dollar breakout to me. Let's see if the technical sorcery holds any power this time around. And it looks like a break to the upside. I think if we break 111, we're going to be going towards 145 pretty quick. This is Tavi again. It says, this is a reminder of how economic downturns developed in the late 1960s and mid 1970s. Stocks collapsed while nominal yields rose. Today, valuations of both equities and treasuries are incomparably worse. Investors are conditioned to fight the last war. This is not 2008. This is like the 1970s is what he's basically saying, and I agree with that. So this is the U.S. 10-year yield in the white. This is the S&P 500 index in the red. And what's coming is I think this was the 60s and 70s during that time frame. It was two bounces. And this was the high 10-year yield moving on up. So increasing yields, declining S&P 500 because of the market conditions. He has it, nailed it completely right. So I agree with Tavi there. Not too many people are talking about that. They think it's like 2008. It's not 2008. It is not 2008. 2008 was a housing crash. We're not in housing crash territory. We're in the 1970s because the demographics, because of the market conditions, all those different things are lining up for what I think is a decline in stocks and bonds, and a very large increase in commodities and value stocks. That's the way it's aligning. That's kind of what some of the information is showing us. That's what we're seeing in the real estate market, all those different things. And I know everyone's so primed up on the interest rates moving up. It's got to slow that inventory first. It's got to slow the price movements, and inventories have to gain. And even if inventories gain, home prices are going to continue to go up. And remember, the game is housing, the volume of housing loans against new housing, against new homes. It's the volume of loans which is pushing the inflation, not the prices, the volume of what's moving. So keep that in mind. It's not that prices are going up. That's just a condition of the state of the real estate market. It's the volume of loans coming into the system, which is inflationary. And then you've got whatever the government's, Federal Reserve and government's doing with their spending garbage over there too as well. So that's what I got for today, guys. Give me a thumb up for the content. Subscribe to the channel if you haven't subscribed. Subscribe to the website, Platinum Membership, if you want to know what I'm investing in and how I'm positioning for this energy bull market. And that's all I've got. So we'll catch you next time. This is Finding Value.